This is the pound yen currently on the 60-minute time frame, and I'm now short a low and tight flag. What I'm going to do is do the higher time frame analysis and look at the reasons why I've shorted the market and the rules for this particular pattern. So let's go out to the dailies first of all, and what we actually have, I'm just going to draw out the trend that we have here: move lower, pull back, move lower, pull back, move lower, pull back. Then we double bottomed, and from that double bottom we saw a move higher. And so if we go ahead here and highlight the entire outside return, then what you're noticing is that we did physically hold this structure level, and we are starting to see bearish movement. In fact, yesterday we saw a bearish candle, indication that we could see a move lower here. So let's drop down to the 240 time frame. On the 240 we did also hold structure up at the top here, and look at what price did. We saw a move lower, we saw a pullback, we saw a move lower, and the next structure level I would expect price to come to is this internal level just here. So there is room for this market to come lower, and we have had a 3-point move. Let's go down to the 60. Okay, you can clearly see here on the 60 we've got this kind of shelf area and the market is coiling, but the pattern for me is on the 15. So let's go to the 15. We have a swing in the market, a fairly directional pole, and then if we draw it out like this, then a bit late to this trade, but then again it's only 8 in the morning. We've got 1, 2, 3, and this is really key for me up here. Time and time again I say watch out these breakout patterns or these channels. We tend to double top before we get the breakout, and what we've done is now we have broken to the downside here. We haven't actually broken below this level. There is a psychological number, but we have actually broken below it, so that doesn't bother me. And if we just now go back to the 60, what you'll notice is that in the last hour we had this lovely big lower close, so we could potentially see this candle get sucked all the way down and come lower. So just back to the 15 where the actual pattern is for me. I'm going to throw a fib on from the low point to the high point, or where the start of the pole is. We're going to be looking for that 127 fib, and I'm just going to bring back on the orders, and stops go just above that double top. It's the safest place. It'd be a nice area to hide your stop behind, and looking at playing for that 127 minus a couple of pips. So 33 pips here for a reward of 38. And we do also know that there is room to come lower down to this potential structure level. So good stops, good entries, good targets.